Disclaimer first, I think for everything that we share, I really want to do my level best, to add value towards your investment portfolio. So I think all accuracy and all materials, please do not float it out. I think it's all to really make some money for property. Okay, because for me, I think, I grew up, of course, not rich, I don't have a silver spoon. So I'm naturally very, very curious how, people, make money. So I really read up books, walk onto videos. I'm just wanting to know how can actually someone make money from property. So there are three things I want to share tonight. So the first, we talk about what we call the first investment strategy, which is called the right timing. Of course, today we don't have a crystal ball. No one has a crystal ball. We cannot predict the future. But what we can do is this. We can also always look at what is the past, right? We always learn lessons from history. We take history as a kind of like a benchmark. And then from there, we try to analyze as much as we can. So looking back, today, we are in this COVID pandemic situation. We are all locked up at home. We can't go out, overseas and things like that. But the thing is this, okay, these kind of things actually happened back in the past in 2003. Something similar happened. Okay, it's during the SARS period. I think that was when I was still probably studying. During that time, when I was talking to my seniors, they also said, people are going to show flat with masks on, walking everywhere with the mask on. So something similar. Okay, but during that time, over a period of 3 to 4 months, we don't know what's going to happen, because before SARS, we don't really have a precedent to match up with. So everybody was panicky and things like that. At that time, I think the government also look at, what is the death rate, what we call the fatality rate, right? So at that time, in Singapore, we had like 200 over people infected with SARS, and the death rate was pretty high. Fatality rate was like 14%. So that was very scary then. But of course, today we're talking about property. So how does it impact property then? So we look back to the past, like 17 years ago. So we took out the chart, because last time long ago, there wasn't really a lot of charting. But today, I think because of technology, because of information, we're able to get back data that is like a blast from the past, right? So if you rewind time, 17 years ago, what actually happened? So the impact of SARS, was actually over 2 quarters, and it had a lasting effect of like total of another 3 more quarters. So a total of 5 quarters. And it did impact the real estate property market by around 2.3%. So that was then. So was it a lot? Yes, it did impact, but I think it wasn't very significant, right? Then after that, what happened next? Okay, you can see during then there was a drop in transaction. Okay, because just now we're talking about price. So this is talking about transaction where everybody was, bothered about whether they have food on the table and things like that, right? So they don't look at properties, but the transactions dropped by like 40% in 1 quarter in 2003. And right after that, immediately 3 months later, it shot up again. So this is what I always share with my teammates and also our guys, that demand can be delayed, but it cannot be destroyed. Demand can be delayed, it cannot be destroyed. Imagine asking your kids not to go to McDonald's for 1 month. I don't think they can really take it, right? They will definitely want to go out. So as mentioned, today in real estate terms, it's the same, right? It can be delayed, but it cannot be destroyed. And I think as Singaporeans and as Singaporean myself, sometimes we also may be a bit forgetful. Actually, in the year 2009, something also happened, right? There's also this H1N1 virus. Okay, this actually went on in 2009, if you can remember, for a period of approximately another 4 months, 5 months plus minus. And I was surprised when I look at the data. Actually, quite a number of people actually are infected by H1N1. But of course, again, the government look at the fatality rate. It wasn't very significant. So, of course, it wasn't that major, right? So this is something that how they look at it. But this time round, things are slightly different, right? We have COVID-19. Okay, yes, we have a lot of cases. A lot of them are also workers, right? So, but in Singapore, in terms of the death rate, it's still considered relatively low. So I think our governments have done a good job, for masking us up, and also thank everyone for doing our part, right? So we mask up everywhere. So I think this kept the numbers low. Okay, and similarly, what happened then? When this happened, I think all of us, even agents and buyers, and even my customers, they're all worried what's going to happen. So now today in 2020, similarly during the lockdown then, in second quarter, you can see a big drop in transactions. But it's a drop, doesn't mean it's zero. People are still buying over Zoom. There was lesser transactions. But the day where phase 2 occurred, you can see, be it the new homes market, be it the resale market, actually the demand just came back. So it came back even stronger, right? It came back even stronger this year itself. So this year is really a very exciting year, and a year whereby there's a lot of things that I appreciate. We don't take things for granted, but I think today, we just not just want to talk about property. We also talk about how you can actually make use of all this information to benefit your investment. Okay, you can see also in Q3, okay, this year, okay, property prices still managed to go up, still managed to go up by like 1.2%. These are private property homes. But what about the total? Okay, this is what we talk about all residential. Okay, look, let's put things in perspective. Okay, this is the URA property price index. Okay, so this year alone, okay, with the pandemic, okay, it did affect prices during the first quarter, but after that it came back. So I can say on overall, probably negligible 0.1% gain. But if you look at 2 years back, 2018 and 2019, do you know that private property prices actually went up by 10%? Okay, so what I'm trying to say is this. You see, year on year, it has been going up, but this year it was slightly different. Okay, there were things that were happening. So today the prices were again suppressed, but it didn't crash, right? I think this is something that we don't want, right? So it didn't crash. So this is to give you some assurance where the market is heading. And I think because of history, not just Singapore, I think everywhere around the world, they kind of understand, how they can actually float the market. So what did, probably example, big countries like US do, right? So they have this thing called the quantitative easing. It's called QE. Okay. So in this statement, I say, position to profit from quantitative easing. Now, what is quantitative easing? For those who understand, quantitative easing is basically something like a printing of money back into the economy, right? That is in the US. But how and what and how does it really affect Singapore, right? If we're talking about US, how does it affect Singapore? So if you look back, okay, there was a crisis again, because we're talking about crisis now. There was crisis like, the financial crisis in 2009. When that happened, they found many, many ways to try to stimulate the market. So the US actually did a lot of QE, pumping in money into the market. And when they did so, you can see that the property price in Singapore just shot up like nobody's business, right? So 50-60% just in a short span of like 3 to 4 years. So once money is pumped into the economy overseas, it actually overflows to Singapore. Okay, so you can see in QE1 they had like 1.5 trillion, and then followed by 600 billion, and then 600 billion again. So it keep on pumping money. And this time around, if you look at early March 2020, US again, okay, because of the pandemic, they again wanted to add money, okay, to add money into the economy again, which is like 700 billion. And then they felt, 700 billion wasn't like enough during March. That was like 15th of March. So I'll take a look at the date. 15th of March. They said, okay, maybe this wasn't enough then. So 1 week later, they announced they want to start unlimited QE. Okay, now, guys, ladies and gentlemen, all these things may not relate to us like now. But the thing is this, it's something that you need to predict, because now we are only in phase 2. What about phase 3? When things start to happen, when economies start to recover. My next question is, are we positioned enough, to ride this kind of wave, right? So again, okay, all this money comes in, and that's why, even the government is worried, right? That's why in the year 2013, okay, a slew of cooling measures came in. If you can recall, if I'm not wrong, it was like 9 to 11 cooling measures. It came on at the right time, 2013, because they understood with all this money, it is definitely going to boost Singapore prices. And that is the last thing the government wants, right? We don't want a speculated bubble, so government put measures into place where actually dampen some of the demand. You can see down here. But then this time around, okay, the big money really hasn't come in yet. So now we're in 2020. So where would the price hit? Is really up to you to guess, right? So as mentioned, we don't have a crystal ball, but we want to take precedence of what has happened, through history, and that's how we plan our investments. Okay, so not just the US, you can also look at the big economies like China, right? So China also has its recovery rebound. Okay, cases started from there, but you see today probably it's all in its single digit for its COVID cases. I think this is a very, very positive thing. And also for their property investments, it started to actually like shoot, like 16-month high. Okay, 16-month high, because I think we are all human beings, and I think in Singapore, Singaporeans, in all, we are really, really love to invest in properties. Okay, Singapore has a high ownership rate of more than 94%. So we want to let you know that a lot of Singaporeans love property. So from here you can see people start to buy. We have probably a similar culture, start to buy properties again. And you can see just 1 year in China, it rose by like 11.8%. So these are just some news to take cue where where are our neighbors doing? How are they doing so far? Okay, and also good news, right? We have all our vaccine trials, last month it all came, all these news. And recently, well, very recently, okay, the government approved the vaccines again to be shipped to Singapore by this year end. So all these small little dosage of positive news definitely will help. Okay, we'll be reopening, right? Wow, I think you can eat. I think we have like 8 people a pack, right? On the 28th, after the 28th of December. So all this small little positivity actually does, give us a really good position right now, right? Because how bad can it be already? So we are trying to reopen the economy. So why do I say this may probably be the right time? Is because first, as mentioned, we want to position the profit from all this money coming from the surplus and budget from the overseas market, so that's what we call quantitative easing. Okay, that's number one. Number two, of course, we believe there will be a stronger recovery because of all these vaccines. And third, okay, the reopening of the economy, phase 3. Okay. So as you can see, okay, we don't say that the property market doesn't go down. Yes, it goes up and down, but I think because of all these years of cooling measures, and that's the reason why this time around you don't see the property market going down. It's because of all these cooling measures. In the past, we don't have all these cooling measures. That's why when the crisis hit, it actually went down. So I also would like to mention the real estate rebounded even stronger after every crisis. So as mentioned, of course, we don't hope to have crises, right? But the thing is this: never waste a good crisis, okay? Never waste it. When it's time ready. So I think first, whether is it the right time is really for you to decide, where I think we are poised for growth ready. Now, second thing we're going to talk about is talking about your second investment strategy. This may be a bit more interesting because I went to take up some numbers. So maybe from here you can understand how actually investors invest. What kind of strategy do they adopt? Okay, so this second strategy is what we call the new launch first mover advantage. Now, what is this all about? Now, how can you double your wealth? Well, it's like a very bold statement, right? How do you double your wealth? When I always see all these things on internet, I was like, what is all this about? Now, later I'm going to show you some of the numbers. If you look at this article itself from the Business Time in 2019, okay, it states that 92%, okay, of new launches, okay, that were sold made a profit. So this was an article in 2019. It actually took out over the past 10 years. It's in red. Probably it's a little bit small. You cannot see, but I just read it out to you. So over the past 10 years, okay, the research department took up that 92%, okay, of the units sold actually made a profit of average $160,000. Okay, so 92.5. Of course, we have friends that always say, hey, Alex, then where's the 7.5? If you don't want to be in that 7.5, please reach out to any ERA agent. We will share with you what kind of properties or what type of properties not to touch. Okay, so in general, you can see 92.5% is a very, very high percentage. It's like closing two eyes and then making a profit right now. Okay, so this is Singapore. Okay. Overseas, I really cannot, say anything because we do not have that kind of protection overseas. But I think in Singapore, 92.5% is very high, right? And of course, we have ranging from 160,000 to even 300,000-400,000 profits. Okay, so this is how confident, why, this kind of strategy people can adopt buying new launches. Okay, you can see this is quite a big sum of percent. So let me zoom in a little bit. Okay, so in specific, how much have they actually made? So example, okay, if they bought a property or you bought a property in 2014, okay, maybe for 1.3 million plus minus, in 4 years' time, okay, this particular investor or client, 4 years' time, they sold at like 1.7 million. So instantly they made a profit of like 400,000, right? So you can see all these people, they made like 300 to 400,000 over a span of like averaging 4 years. Okay, so I think this is quite a lot of money. I'm a real estate guy. I like to invest in something whereby I can sleep, right? So real estate is something for me. You can see that this kind of profits, if you look at on the extreme right, they're making like 20 to 30%. Okay, so but when you look at this kind of statistics, we may not feel anything because why? We're looking in the wrong direction. What does a 25.9% mean? Okay, ladies and gentlemen, a 25.9% means you have just doubled your investment. Okay, what is the down payment today? The down payment today is 25%, okay, for what we call investment property, right? So if you are able to make a 25% profit, you basically double your money, right? These are the easiest way for these people to double your money. But of course, we always have skeptics. They always say, what about those that don't make money? So let's look at the averages, because I also don't like to look at the top winners, right? We want to know how practical can we be when we invest in properties. Now, first, real estate is actually a very good hedge against inflation. If you look at inflation over the past 44 years, okay, the blue line, so the blue line represents inflation rate. On average, Singapore, it grew by around 1.97%. So this is the average. We really took many, many years ago, 44 years. But real estate property prices, it has actually appreciated on average on a compound interest of approximately 2.17. So overall, property prices actually, beat inflation. And then you will say, Alex, this is a grandfather story, 44 years again. 44 years ago, can we be a bit more practical? I said, yes, of course we can. Now, look at 20 years. Okay, 20 years growth is also around 2.66% per year. Just now was how much? 2.1. So now we're talking about 2.66 over the past 20 years. They said 20 years is also a very long time. What about, let's shorten the time a bit. Now look at 10 years. It also grew by an approximate 2.77%. So ladies and gentlemen, do you see something in common down here? Regardless what kind of time frame I look at, what kind of statistics I pull out, because people say we cherry pick data, but we will let you know whether it's 44 years, 20 years, 10 years, you will look at average prices approximately 2 to 3%. I think this is what the government wants. They want it to be sustainable and healthy, right? We don't want it to be like 1 year 50%. That would be like crazy, right? So 2 to 3, I think it's at a very healthy rate. Anything more, I think the cooling measures, you'll have more cooling measures. So I think this is a very healthy rate of appreciation. So I always like to take this kind of numbers as a benchmark on how much I should basically make over the next few years. Okay, so now let's put things into real perspective. Today, I believe you want to be an investor. You want to know how to invest in real estate. So today, just imagine, if you were to buy, okay, a $1 million property, okay, and with an appreciation rate of 2.5%, year on year, okay, after 10 years, what is your gain? So for those who are good at math, can you just let me know? I'm not sure how you're going to let me know. If you know the answer, just raise your hand. Maybe you may be right or maybe you may be wrong. So in every year, if it increases by 2.5%, what is your gain over 10 years? Okay, so maybe I'm going to show you. Okay, if you are wrong, then maybe you need to take out your calculator again. Now, after 10 years, this will be your gain, right? 280,000 profit. Okay, so again, guys, ladies and gentlemen, today, if you were to buy a property, your down payment is probably 25%, right? 250,000. In 10 years, without you doing anything, okay, more or less, you will probably make this gain already. And I think 10 years are very conservative already. You'll probably only make, 280,000. If you look back 10 years, okay, anyone who bought a property at $1 million, today, they're probably sitting at $1.7 to $2 million. Okay, this is the truth. Okay, but I want to be very, very realistic and down to earth. Okay, we just want to play it prudent. Okay, so 10 years, I think 280,000 is a fair amount. Now, then how can we actually double your money in 10 years? So because you are staying in it over the 10 years, you've been paying installment, right? Installment 2,005 every year, and this is what we call forced savings, equity built up. So just imagine today, okay, 10 years later, okay, if you were to sell your property, do you know actually how much do you put back in your pocket? Because just now, based on my example, you probably would think, oh, I made 280,000. That's it, right? That's it. But no, ladies and gentlemen, don't forget, every month you are paying your installment as well. Either you are paying your installment, or if you are renting it out, someone is paying it for you. Okay, so I'm just going to show you a very quick breakdown. 10 years later, what will be your outstanding loan to the bank? Okay, so by taking a $1 million, buying a $1 million property, okay, 10 years later, probably you'll be left with like loans of 500 over thousand. So If you were to sell your property in 10 years' time at 1.28 million, you pay back the bank 500 over 1,000, what will be left sitting in your bank account? Okay, so I run out some numbers. So again, with $1 million, okay, you put down 250,000. 10 years later, this would be your estimate value, and you probably owe the bank this amount, okay? But this amount of installment have been paid by you, so it's technically your own money, so I don't want to put that into consideration. But after selling, you will probably be sitting on 743,000 in your bank account. Okay, true. Because why? This amount you already paid for your installment, and you only owe the bank 500 over 1,000. So which means to say, if you have 250,000 today, you buy and you stay in it for 10 years, you will probably be sitting on 700 over 1,000 after you sell your property 10 years later. Ladies and gentlemen, I really cannot see a better investment. Honestly, there may be business, you can talk about stocks and shares, but I really felt that real estate is something that I can sleep every single night. And 10 years later, I know, where I'll be heading, right? So this is technically like doubling your money. And if you think this is not exciting enough, now let me just show you one more example about this. Imagine this time round, you are staying somewhere else, okay? But you have used this money as an investment. Someone else is paying this mortgage for you, which is called the tenant. The tenant is paying this mortgage for you, paying your mortgage for you for the next 10 years. How much money will you actually make? Okay, so technically you would have tripled your money. Okay, 300% plus minus 297. So you will actually triple your money. Okay, if you rent it out over 10 years. So guys, this is triple. I did not even shout triple right now. So we are talking about doubling. So this is why, this is how we understand what we call financial education. Nobody taught me in school. Nobody told me it's all about this, right? We are all taught to work hard, work harder, maybe work even harder and save money. But I think we're probably going the wrong direction. I think, if we were to understand how, financial education work, financial literacy work, I believe everybody, have an opportunity to actually get out of our own, race right now. So you want to make money, of course, we have to understand what kind of vehicles, can help us make this kind of money. So who wants to triple their money? Can I have a show of hands? I want to see anybody, you're still awake. Okay, because I'm talking to the camera, a bit, difficult. So can you just give me some interaction? So if you think that this has added a little bit of value to you, just like and share this post. Okay, so what is the investment strategy that we are talking about? Okay, when all this happens, okay, you can see, okay, Sterling Residences, since its launch in 2018, that was like 2 years ago, up to today, 2 years, okay, it has already appreciated by 14.2%. Okay, so guys, I was talking only about 2 to 3% every year. But look at Sterling, it has already appreciated by 14%. So it's already more than my expectations, really, right? So Sterling Residences. So what's the strategy for this? Buy here and then sell when it profits, right? So I think it's quite a no-brainer, right? So the investors actually go into this over and over again. Okay. What about Commonwealth Towers? Similarly, 6 years ago, right? 6 years ago, today it has appreciated by around 12.9%. So 6 years, if you divide by 6 years, it's around 2% per year, still within expectations. Okay, let's show you some more examples. What about Interlace, another big project nearby Normanton Park, which I'm going to share with you later. Interlace for the past 10 years, it also went up by like 20 over percent, which technically also makes it like 2 over percent a year. Okay, so I think, it's still within expectations. What about 𝓟𝓸𝓻, another big project, okay, 1,700 units, 12% of gains in the last 2 years, okay, 12% of gains. So you can see this is like exceeding expectations, right? 1 year, 6% gain, that is like exceeding expectations. So this is something how I actually benchmark, whether are we making money within, what is supposed to make. So even Kingsford Water Bay, I put up somewhere further, okay, somewhere even further, 5 years, okay, like it or not, you just have to buy and sit down there and do nothing, and 5 years later you make like 13%, right? Every year another 2%. So I think this is why, and how investors actually make money. Okay, they just have to buy and wait out, right? So even for the whole of District 5, Okay, where I'm going to share a bit more on District 5. Over the past 5 years, I think it has outperformed. 5 years, it has appreciated by 28% on average. So every year is like 5%. Okay, so this is why, you can see that why are people actually buying up properties? Because more and more people get to understand all this already. More and more people. In the past, there wasn't statistics. In the past, there wasn't social media. In the past, you don't have a lot of speakers here sharing with you these kind of things, right? I don't have all this. I have to draw Excel sheets and really understand. But I think today things are very different. So what is the main strategy about this? Okay. So guys, it's not about timing the market. It's about time in the market. So time in the market beats timing the market. So I repeat again, time in the market beats timing in the market. So all you need to do is to buy and wait out, right? So that is the whole strategy for real estate. Okay, so this is the second strategy. So until here, if you guys think that you are learning something, can you just like again and raise your hand, because we want some energy. Because if not, I won't share the G's. Okay, no, I'm just kidding. So I'm going to share, okay, a little bit more about the next strategy, which is coming to something very, very important. It's called the right entry price. But even before I talk about the price, I must share with you some preview right now. So for those who actually came in just because of Normanton Park, okay, just a little bit of preview of this. Normanton Park is actually an en bloc that happened in 2017. So it retains the name Normanton Park by 𝓝𝓸𝓻𝓶𝓪𝓷𝓽, right? So it's one of the biggest en bloc purchase at its time. Okay, it is a very, very massive, majestic, and mesmerizing project. Okay, it is a 1,862 unit development. Okay, so just to update you, just to let you know, this land itself is like 660,000. Okay, this will be the largest launch next year. Okay, this will be the largest launch next year. And this project is also the most iconic and the largest project in the whole of the RCR region. Okay, so this is the largest project you can get ready. Okay, so let me speak up some important things. Here, 1,862 units. And of course, I'm going to share this later. We do have 22 strata houses, okay, and also some commercial lots. And one of the good things is that this project, it will TOP early. It will TOP second quarter of 2023. So that's the target. Second quarter 2023, which makes it to be around 2 over years only. 2 over years. Okay, and this project itself, okay, will be the largest project that will undergo the 100% quality mark, okay, by BCA. Okay, so Normanton Park itself, okay, 𝓝𝓸𝓻𝓶𝓪𝓷𝓽, the main contractor will be MCC Land. So for those who are familiar with MCC actually did a lot of recent projects like Queen's Peak, Alps, North Wave, Poise, Santorini, Nautica, and many, many other projects. Okay, and this to show you that they will be going through a 100% okay certification, what we call the quality mark, okay, upon TOP. I don't think this will be the largest project that will undergo this 100% mark. Now, this project itself, for those who are unaware, okay, is located in the RCR region, very near the Queenstown and of course the Greater Southern Waterfront area. Okay, it has a range of 1 to 5 bedroom units. Okay, and basically it looks like it's sitting on a hill, right? So you have very nice sea views that you can look at. So it's under the planning area called Queenstown. So Normanton Park is down here, right in the central region of Singapore. Okay, so this is the elevation, the top, the location map of it. We are actually right next to Science Park. Okay, on top of behind Kent Ridge Park itself. Okay, and down here all the way it leads to Commonwealth and Queenstown area. Okay, just minutes drive down to CBD. Okay, so this is how it looks like. A total of 9 majestic blocks for Normanton Park. So for Normanton Park, this architect is Eco-Plan Asia. It actually takes inspiration, its design takes inspiration of what we call the Amazon River. Okay, so it's basically going to be like a project that is right in the heart of Amazon River. You're surrounded by greens, and yet you can see water features, and you can also get to see a lot of trees and nature. Okay, so the architecture itself, 6 hectares of grand landscaping inspired by the Amazon River. So you can take a look at the Amazon River, basically, curves, everywhere. So later I'm going to show you how does it look like for the project itself. Okay, so This is how it looks like. We have more than 100 facilities. You can see that all the water features curves that actually gives a little bit of excitement at every corner, at every turn. So I think what the architects want to do is that they really want to build something that is very different. Okay, and because of its large landscape, that's why it's able to do so. Okay, so this is just the very iconic grand entrance. I cannot go through all the facilities. Probably you can look for any ERA salesperson, they will go through with you what are all the facilities. Okay, this is how it looks like. Very, very grand, very majestic. No, either it faces the green, the seas, or it faces the Amazon River itself. Okay, location-wise, it's like 3 to 5 minutes to anywhere, drive 7 to 10 minutes all the way downtown. So I think the location itself is perfect, for those who are going for own stay or also for investments. For amenities wise, a lot of the eateries are actually located in the Science Park area, all within walking distance. So for all this, you can take a screenshot. And the developer itself, they'll be providing a 2-year shuttle service, okay, from Normanton Park to Kent Ridge MRT and also Buona Vista MRT, where you have your cold storage, so you don't have to walk, you don't have to even drive, right? So there is a shuttle bus that will shuttle you down there. Okay, for those who have kids, we have a childcare nearby, Cherry Hearts, Maple Bear. So all these are all within its vicinity itself. But what's more important, okay, because I believe some of you are buying this for investments, okay? So if you buy for investment, you probably want to buy near to where your tenants will be. So One North Business Hub, it's a very important hub in Singapore. So it's more than 200 hectares, and there we have more than 50,000 over workers. Okay, this area actually focuses a lot of biomedical science, infocom technology and media. So a lot of tenants, would definitely want to rent somewhere around One North. Today people like to cycle, so a lot of healthy lifestyle, healthy living. So they want to stay nearby. Okay, where big companies like P&G, Shell, they're all down there. Ministry of Education, GSK, Unilever. I think these are the very, very big brands that you will be able to see. There's also an extension, one of the extensions called the Dover Knowledge District. So it will be actually developed again. So this will actually create more jobs, more opportunities, and ultimately more tenants for you, right? So this is the whole idea of buying near, this kind of what we call One North areas and business hubs. And also importantly, there's a Science Park. There's Science Park 1 and Science Park 2. This is similar to like the Silicon Valley of Singapore, right? I do not know how to make comparison, but yeah, it looks like Silicon Valley in Singapore, whereby all your, your A star, your A grade, tenants are all down here, right? You have Destar, AT&T, FJ Benjamin, so all these big brands are all down there, multinational companies. So from here, we've employed more than 10,000 people, right? So this is where your tenant pool will walk. They will walk back home, if you actually get a unit at Normanton Park. Okay, and also it's near NUS. So NUS actually, we're very proud to have NUS because it's actually the top, what we call top university in Asia, right? So it's one of the, not one of, now it's rated the top already. So this is where, sometimes, you have students from abroad, nearby, their parents, they actually want to stay nearby the campus. Even students themselves, they want to stay nearby, students, staff. So we have more than 50,000. And I think this is what, gives it the rentability. So what kind of rentability are we talking about? Probably in Normanton Park. So we can take projects nearby, like for example, right, Interlace. Okay, you can see that it's a 2-bedroom. Of course, its size is slightly bigger, so 3,002 to 4,003. Okay, on average, rental yield 3.3%. Not bad, huh? For a 1,000 over unit condo, it's like 7 years of age, it still can yield an approximate 3.3% just because of its location near to all these business hubs. Okay, even 𝓟𝓸𝓻𝓵, a big project as well, 1,700 units, its average rental yield, okay, because it's a big development, is 3%. So why do we want to take 𝓟𝓸𝓻𝓵? Because I think we want to share with you that a lot of tenants, they actually prefer big projects because they want to enjoy the lifestyle. It's like they're really going to pay rental. Might as well pay a rental whereby they can enjoy facilities. Moreover, you want as many facilities as possible. So I think buying a big project is also important. So that's why I took out Interlace, 𝓟𝓸𝓻 as a comparable. Okay, One North residence, because of its location, a medium-sized project, probably 11 years of age, its rental yield is also yielding at 3.5%. So you can see that this whole area, Okay, it's all like 3% in terms of its rental yield. So we took out statistics, in this area again, Reflections, Caribbean, all the big projects, Interlace, Dover Parkview, One North Residences. You can see in this whole area, the rental yield is really, really good, like 3%. Really better than some locations. Okay, so end of the day, I think this is where you want to invest in. Okay, if you can get good rental, all you need to do is to wait for the capital upside, right? So getting a rental, the strategy is just to wait for the capital upside while renting. Not only that, let me share with you some hidden potential. Now, those are the things we already know. But now I think it's time to unlock the potential of those that what we don't know or what we foresee. So this is the master plan for in Singapore, right? So Normanton Park is down here. Okay, the one I put highlighted in black here. And this is like One North area and Science Park areas, right? So you can see all those that I circled out. Okay, these circles are subject to detailed planning, which means it is not launched yet. It is vacant. Okay, these places I don't say may, it will definitely be commercial, but it just takes time, right? So all this along the way, government may just release for business use. So from this, it will again create demand, right? Create potential tenant demand into this area itself. Okay, so these are all its potential. So if you see, sometimes we need to read into the master plan, right? We need to read into the master plan, what is up and coming. So I think this definitely gives it its edge, right? Its potential. And then when we dive into deeper, Normanton Park, there's also going to have two new upcoming future roads. Okay, one, it's going to have a shortcut towards the bungalow areas. Another one, you can see is highlighted here, dotted lines, like can't even see, right? You have to zoom in, right? Yes, this is what we do on a daily basis. We have to research and advise our customers what is up and coming. So this dotted line, okay, will it be a future road? Definitely, because it's already in the master plan, but we do not know when, right? So it can be 3 years, 5 years, 8 years down the road. We don't know. But definitely now there's going to be a shortcut from Normanton Park, probably a tunnel. They probably won't cut this Kent Park because it's a very valuable land. They probably cut a tunnel under, and then it will go all the way to South Buona Vista, from West Coast Highway, Pasir Panjang, all the way to CBD. So this will add convenience all the way to Greater Southern Waterfront, because you guys know Greater Southern Waterfront is going to be a very big development. So from there, we have what we call entertainment, lifestyle, and even offices. So all these convenience do help. Okay, all these small future things. But by the time they announce this, I believe they will probably sell you higher prices already. Okay, so that's why these are things that we want to pick up for our buyers to actually understand and to try to tap on all this potential. So the project itself, the architect, P&T consultant. So it looks very, very majestic. Okay, basically for Normanton Park, it's second story all the way to 24th story. Why do we want to say it's majestic? It's because not only is big, okay, at the top, okay, it also has a beacon which actually mimics a crown, right? We have to crown the majesty, right? So it acts as a crown to the tower itself. And it illuminates at night. So at night, wherever you are, I think this project, everybody will be able to see it. It will be the icon. Okay, it will definitely be the icon in this area. Okay, when you drive past every day, you will be able to see this as well. Okay, and also on the ground floor, okay, the lift lobby. Just take a look at the lift lobby. Okay, the architects deem this as what we call the grand portal. Okay, the portal. This portal itself, okay, is elevated 18.8 meters. So can you imagine, you walk through this portal, you basically we transform you into a new dimension, right? Walking into a new dimension. This is how big and massive this whole grand entrance is. So I really, really love the design of all this. Okay, so you can look, this is how it looks probably at night. Okay, you can see it's sparsely spaced out. Okay, you can also see this is a 150 meters pool that mimics the Amazon River, and it turns. It's a very nice 150 meters pool, and another 100 meters pool. So in all, it's like 250 meters, but there's a small break over here. So it's 150 meters plus another 100 meters of pool. So we call this the Amazon River. Okay, this again, okay, just to show you, it's all sparsely, the blocks are all spaced out well. So it's 100 facilities. So some perspective for you to take a look. Okay, you can also dine in the woods, right? They call this dining by the water in the woods. So as mentioned, the architects want to bring nature into the development itself. Okay, they want to blend the whole project together with all the nature, right? Blending with nature. So Kent Park is right in front of us. Okay, even its grand lobby, grand entrance, drop-off point in the basement, this is how big it is. Okay, you can see it's very, very big under the basement. Okay, so it doesn't affect anyone on the first story. We have a couple of 50-meter lap pools. Okay, we have a couple of 50-meter lap pools, and we have 100-meter lap pools. We also have 150-meter pools. Wow, so this is how big it get. We do have 22 commercial units. Okay, sorry, we have 7 commercial units and 1 restaurant. Okay, so 7 retail and 1 restaurant, which is also open for sale to public. Okay, so this will be very, very limited. So if you have any interest in commercial shop lots, please let our ERA agents know. Now, this is the top view, aerial view of the site itself. Okay, so you can see that there are 9 majestic blocks down here. Okay, it's all spaced out. So some of it actually faces the 5 million square foot of Kent Park itself. Okay, and of course, some will facing some of the landed. So I'm going to show you some of the views of it. So one of the selling points for this is this: all units have a view. Okay, all units at Normanton Park has a view. Okay, you can see how the design of it looks like. They want all blocks to be a little bit of a unblocked, right? So that you don't look into each other. They don't want blocks to look into each other. Okay, so this is how it looks like. Wow, isn't this amazing? This is the 5 million square feet of Kent Hill. What does this show you? I mean, this really, when I first saw this, I really, I just I have no choice but to link it to another place. Have you all been to Hong Kong? Right, you've been to Hong Kong. When you drive along Hong Kong, you see some, residential on the hill, right? They call this the peak, right? Something, right? So when I research about all these places, really, I think their per square foot Sing dollars is in the 10,000 to 20,000 Sing dollars per square foot. Of course, I don't want to make comparisons like that, but I think people are willing to pay for properties that are on the hill. So for properties like Normanton Park, it's actually sitting on a hill that is 60 meters above sea level. Okay, this is Kent Hill itself. Okay, Kent Park. So I think I really like to look at that not many people understand the potential of this kind of properties. Okay, people from overseas, they will want to grab this because there's water, there's hills, there's trees, there's greenery, and ultimately there's a very good view. So something that you don't want to overlook. Okay, so facing the north, you can see it faces Commonwealth Tower. So this is the actual view that you can get, for units that are facing the north. Okay, Commonwealth, Tanglin, Holland Village, and some of our botanic gardens over here, Holland areas as well. On the west, okay, you overlook some of the urban landscape of Singapore, also Science Park, Star Vista, Buona Vista, and some of Bukit Timah Hill down here. This is the west facing. One of my favorite facings, viewed from the south, right? So Greater Southern Waterfront, all this port is in the midst of moving. So all this, you will get to see a very nice sea view, right? Maybe probably from 15 levels onwards, you get to see a very nice sea view. But for the lower floors, you get to see all your greens and nature, 100% unblocked. Okay, so because nothing will be built here, all these are all conserved, what we call nature by MParks already. So nothing will be built there. So it probably looks something like this for the mid floors to the high floors, a little bit of sea and the greens. I think this is really, really awesome. And also the east view. Wow, this view, sometimes it's not easy to have this view because if you have not been to Normanton Park, when you drive inside, it's really like an island by itself. When you drive in, it's super quiet, right? You can hear even the birds chirping. So on the east facing, okay, on the lower floors, one of my favorite views, you actually get to see the black and white colonial bungalows. You can see down here, they're all black and white colonial bungalows owned by the government. So these are very, very nice landed views. Not only you get a landed view, you get the greenery views, you get the sea view, and you also get the city view together with MBS. Wow, I think this is something that I'm not sure whether your salesperson has spoken to you, but I think today, they will definitely rush and inform you of this view. So this is something that you want to check out because all these places will be very, very much unblocked. Okay, so for units here, we have a 1 room all the way to 5 bedrooms. Okay, so we have 1 to 2 bedrooms for those who are looking to invest in Normanton Park. We also do have the 3 and the 4 and the 5 bedrooms for own stay. And also for the unique customers, we have the 22 terrace houses for you. Okay, it's like later I'm going to show you 22 houses, 4 bedrooms, 2,000 over square feet. So whether you are looking for investment or whether you're looking to stay, okay, we already have inquiries that people want to buy in bulk already. They want to buy one for investment, one for stay, because it's all in the same development. It's very easy for you to manage. Okay, so this is how the breakdown is going to be. So we have sizes from 400 over square feet, 2 bedrooms, maybe 600 over square feet to 800 square feet, 3 bedrooms, 900 over square feet to the bigger ones, 1,000 over. The 4 bedroom smaller size is 1,195. On an average, it's 1,003 square feet and above. Okay, and the 5 bedrooms, of course, we only have 2 stacks, 1,615 square feet. Okay, so these are the 5 bedrooms. So at this show flat, if you guys are keen, we're going to preview. I'm going to share with you some of the preview, but to show you, we actually have 4 different types of show flats down, what I call 4 different types of model at the show flat. So one of it is the 1+ study, 500 over square feet. You can see that the layout is very, very decent. Okay, there isn't any odd corners or bay windows of such. So as you enter, you can see, so the kitchen is kept to one side. So all units have a balcony, okay, a good sized balcony. Okay, the bedrooms are down here. Okay, some of it has a study, so it depends whether you need a study or not. Okay, so this is how it looks like. If you want a bigger living, you can actually knock down the walls, because this project, it's not, for those who understand, it's not PPVC. So basically, you can actually remove some walls if you want to. So this is the 1+ study layout. So most of the 1+ study will be facing the Amazon River. Okay, you have the pool view and the internal view itself. So the 2 bedrooms, okay, the 2 bedroom premium, we actually face the sea for those sea facings. Okay, you can see when you enter again the kitchen, one side, you also have a very smart corner down here on the left where you can have all your storage all nicely tucked here. So it's a very smart area by the developer. Okay, again, it has a balcony space. Okay, 2 rooms, 2 bathrooms. Okay, so we have different layouts. So I think it's best that you can speak to our ERA salespeople. They will be more than willing to sit down with you and share with you all the different bedroom types. Okay, because we have different sizes, but these are just what is available at the show flat for you to see. Okay, the 3 bedroom size 1,098 square feet. So similarly, when you enter, you get this very nice wall here where you can hang your art. When you enter, you see a 2-side kitchen, okay, and a store behind. Okay, so the half of it will be made of glass. So it depends whether you want to remove the glass to make it open concept, but it can be a closed up 3 bedroom. Okay, so this is the 3-room premium facing the sea. Okay, similarly, you can see the balcony. Okay, it's like how much? 5.7 meters. It stretched all the way to the 3rd bedroom, whereby if you think that you want a bigger living again, you can actually remove the walls yourself. Then you get a bigger living. So it depends. So I think it's very flexible for buyers that want to have a bigger living area. Okay, so 3 bedrooms. Okay, bathrooms are 1, 2, and of course you have another one at the what we call the kitchen area itself. Okay, so 3 bathrooms. So these are the types of 3 bedrooms that we have. Okay, we also have a 5 bedroom show flat for you to take a look. Okay, coming in similarly, there's a private wall down here where you have your privacy. There's a wet and dry kitchen for the 5 bedrooms. Okay, a very big living area. Similarly, if you don't want the 5th bedroom, you can actually convert this to again the living area. So we only have 2 stacks, and both of it faces the south facing. It faces the sea facing. Okay, so only 2 stacks that is available. Okay, so 5 bedrooms. Okay, it comes with a walk-in wardrobe. Okay, of course, the master shower. Okay, so this is how it looks like. So I really hope all of you will be able to take some time to see the show flat when it opens. Now, the 4 bedroom terrace houses are for the unique customers, because why? It's a 2-story strata house. Okay, a 2-story strata. Okay, it comes with 1 private your personal, what we call car park lot. Okay, the other one is a common lot. But I mean, if no one is there, you can make full use of it. So, but it comes with only 1 car park lot. And what's more interesting is that this whole strata area of 2 stories, it only includes up to the PES outside here, your main door. Okay, because why? Outside there's another garden, which I think it's going to be, when you buy this terrace house, you get a free garden and also a free pool for you to swim. Okay, I'm going to show you how it looks like. So everything that's in front of the house is actually the common area now. It's not free, it's common area, but at the end of the day, you're not being charged for it. Okay, so you can see So the house itself, all this whole pool, is mainly for this, pool villas, for them to use it. And this garden itself is maintained by the MCST. So it's not part of the strata area that will be sold to you. So you only buy up to the main door itself. Okay, you only buy up to the main door itself. So this is something interesting. Okay, of course, we have 7 shops and 1 restaurant. For this, I think for customers that are looking to invest in commercial shop lots, please speak to our real estate salespeople. I think they will be able to recommend you. So it's also up for sale as well. Okay, now price. Wow, I suddenly missed the price part. I think you are interested in the price. Now, price, yes, it's very important to enter at the right price. So we just want to show you what is happening today in terms of the price. Okay, so I'm going to pick projects around this location. For example, Sterling Residences at Queenstown today is already averaging at 1,009 per square foot. Okay, and we don't want to talk about the high. We just talk about the average. It's 1,009 per square foot. Avenue South, okay, for those who are familiar, it's 2,000, but today I think it's 2,001 per square foot already. One per bank, for those who are familiar, maybe 2,004 to 2,005 per square foot. Park Clementi's at Clementi itself today is averaging at 1,006 per square foot. Okay, so Park Clementi's itself at Clementi is 1,600 over per square foot. Kent Hill, just below us, it's 1,007. So somewhere further, just to put some perspective on the prices around Singapore. And there is 1,007. Park Esta, closer to the eastern side, okay, 1,007. Jadescape, okay, 1,007 on average, and Verdale in Bukit Timah is 1,007. So all these are the recent launches, because prices today of the GLS is also not cheap. Okay, government sells land, it also doesn't come cheap. So today, okay, even after COVID, you can see prices are, we only want to talk about the low, we don't want to talk about the high, because if we talk about the high, I think, we just think that it may be too high, right? So on the low side, okay, the lower sides is probably looking at Trevor, N Terrace, Jadescape, just bear in mind the locations of all these. Daintree, Mayfair, View at Kismis, all this in Bukit Timah, and also Queenstown area 1,008. So all these prices today is what is happening and transacted today, in the year 2020. So we're not talking about the past. So after the pandemic, you can see everybody is coming back to buy property at this kind of base prices already. And even more interestingly, not just buyers, even developers. You can see it's very optimistic, because even at Tanah Merah, okay, developers are buying at $900 per square foot per plot ratio. This is not exactly, it's around the same price as Normanton Park, but this is in the eastern side of Singapore, right? Tanah Merah. So can you imagine? So if you ask us, how do we compare? Okay, how do we compare? So today, Normanton Park, how much do you think, based on all this, will it be priced? Okay, when I saw all these statistics, I myself, I got a shock, because when someone asked me, Alex, what's the price of Normanton Park going to be? So I tell them, oh, the price of Normanton Park probably today is the same price as Tanah Merah, probably the same price as West Coast Clementi, and also Punggol Sengkang. So I say, that is simply unbelievable. So what if I told you that the prices for Normanton Park will start from 1,006 per square foot? Isn't it amazing? Who thinks this is amazing? Can I just click a share, like button, or raise your hands? Because, guys, ladies and gentlemen, I'm really, really honest here. It is 1,006XX. Moving forward, trust me, you won't be able to get this kind of price already. Okay, if you miss this, it's going to be everywhere in Singapore, the eastern side, the western side, you'll be paying 17XX already. So this will be the starting price for Normanton Park. For those who are keen, we have limited units for 1 bedroom that will start from 7XX, but on average, it will be 8XX. Let's put things in perspective. The low floors, you have 7XX for the 1 bedroom. In this whole area, very, very limited supply. Okay, you don't really have a lot of 1 bedrooms. Okay, so it's good for investors that actually want to double their wealth or even triple their wealth, because if you enter at a low price, I think you will get a very high rental yield. Okay, so the 1 bedroom is from 7XX to 8XX. For the 2 bedrooms, okay, you probably get low floors from 1.0x million. Okay, 1.0x million is really, really undervalued. If you look at any resale properties, okay, I'm an investor myself. I've been looking properties every day. Okay, if you look at properties in just this Queenstown area, a 2 bedroom will easily be 1.3 million, 1.3, 1.4 million. A 2 bedroom, sorry, a 2 bedroom is 1.3 to 1.4 million. So if you look at 2 bedroom in Normanton Park, if it's going for a sea view 1.2 or even a park view 1.1 1+, I think it's really undervalued. Okay, so this is something that you can look at. Okay, 3 bedrooms ranging from 1.4 plus. Of course, the sea view will be 1.7 plus. Okay, 4 bedrooms, 2 million plus minus to 2.2. 5 bedrooms, 2.7 plus, and of course you have the terraces and shops. So I think for whether is it for investment, for own stay, it's really something exciting. So next year, I think all the demand will come here already, because why? If you can get a RCR, okay, with such rental potential and way below value, I think it's something that will really impress every buyer. Okay, so really hope you guys can take a look at the place itself. Okay, so in 2021, okay, this is the project to look out for, because just a little bit of summary. Because number one, okay, the market confidence is coming back, right? We're going to reopen the economy, so this is something positive, to position yourself to profit. Number two, there's a low supply for small units in the market. In the whole of Normanton area, you really don't have any 1 bedrooms. Okay, just right next to Science Park, there's nothing there. Okay, you can go and check out. There's nothing for sale, anything besides Science Park. Okay, so number three is strategically located in the RCR location. Okay, this is like an island itself, a very private, quiet enclave. Do drive by, the roads there, you understand already. Number four, okay, very low entry price. As mentioned, 16XX, 17XX is the price of the extreme east, the extreme west, and also the northeast of Singapore. Okay, and number five, for investors, okay, you basically get to collect your rent early, because we are targeting TOP second quarter 2023. So never waste a good crisis, right? 2023 second quarter, you'll be able to get your keys. For those who are looking to stay, you don't have to wait so long, I think this is a project you should look at. Okay, number six, of course, I mentioned about all the existing business hub, not just existing business hub. Business hubs that are, that's going to unlock it's what we call the commercial lands, right? I shared with you just now, all these lands that they have not even launched yet. Okay, number seven, a very big site, okay, with every unit has a view, right? So every unit 360 degree, whether it faces the Amazon River, whether it faces Kent Park, the sea, the CBD, Sentosa view, it's all here already. It's really for you to pick and choose. And lastly, this is a majestic garden home right in the heart of the city. Okay, so something not to be missed. Okay, so I just want to end with this quote, to say that I think it's important to buy at the lowest possible entry price today. I don't think you can get anything. Even recent launches are all 1,000, 6,000, 7,000, 8 already. I don't think you can get 1,000, 3,000 for. You can't get it for a new launch already. So once you miss this price, ladies and gentlemen, trust me, you miss it forever. Okay, so buy at its lowest entry price to enjoy maximum upside gains. Okay, so as mentioned, with all these strategies just now, all you need to do is to buy and wait. You don't, because why? Thanks for trusting ERA and all our salespeople, because for us to continue and we try to add value towards your property purchase. Okay, so with that, I really want to thank all of you for your time. I think it's a really good night now here, and wish you all the best. Merry Christmas in advance, and I hope you guys visit the show flat on the 2nd